Welcome to Breaking News to Trading Moves.
Good to be here.
So today we're talking about a specific incident, an accident actually, at a really major metals producer, Freeport-McMoRan's Grasberg mine.
Yeah, in Indonesia. And it might seem far away, but the moment that news broke, it had, well, immediate consequences right across the copper market.
Absolutely. And what we want to do is just clarify what happened and look at who are the winners and losers in the market based on that reaction.
Trying to see who benefits when copper supply gets squeezed and who gets hit financially.
So the event itself, a mud flow accident and tragically a deadly one at Freeport's Grasberg Block Cave mine. That's ticker FEFCX.
Right, and this isn't some minor operation. Grasberg is huge for global copper and gold supply, so any disruption there, it gets noticed.
And the first impact was on FEFCX itself, their outlook. They had to adjust guidance almost straight away.
They did, yeah. Freeport cut their Q3 guidance. They're now expecting consolidated copper sales to be, about 4% lower than they thought back in July? And for gold, it's a bit more, around a 6% cut in expected sales. But, the Q3 numbers aren't really the main thing that caught the market's attention.
It's the duration, isn't it? The timeline for getting things back online.
Exactly. That's the key detail. Because of the damage, a large part of the Grasberg mine is likely to stay shut down deep into the first half of 2026.
Wow, 2026.
Yeah. And when the market hears 2026, it knows this isn't just a quick fix. It's a sustained hit to global copper supply.
And sustained pressure usually means higher prices. At least initially, we saw that pretty fast.
We did. Copper futures jumped about 3.8%, hitting around $4.82 a pound. That's the market saying, okay, supply's tighter now, and for a while.
Okay, so let's follow that 3.8% price jump. Who benefits? The logical place to start is other miners, the ones who weren't affected.
That's the first group, definitely. Diversified copper producers listed in the U.S., but with mines outside Indonesia. For them, the higher global price just means better margins.
More profit per pound.
Exactly. Their costs haven't changed, but the price they get has gone up. Think about Southern Copper, SCCO. They're a big player, operations elsewhere. This price rise is good news for them.
Makes sense for a pure copper company. But what about someone like Newmont, NEM? They're mostly gold, right? Why would they benefit from a copper issue?
Good question. It's about the byproducts. For miners like Newmont, copper often comes out of the ground alongside the gold.
Right.
So when copper prices go up, the value of that byproduct increases. They call it byproduct credits. It basically lowers the effective cost of mining their main product, gold.
So it makes their gold mines more profitable just because copper got more expensive.
Precisely. An automatic boost to their project economics without any extra effort on their part.
Okay, so that's the miners. But the higher price ripples outwards.
Yeah.
What about recyclers?
Yes, the U.S.-listed metal recyclers are another group that can benefit here. They hold inventories of scrap metal, including copper.
And when the price of new copper jumps?
Their existing inventory becomes more valuable overnight. They can get what's called inventory gains.
Can you give an example?
Sure. Look at Radius Recycling, RDUS. They handle a lot of non-ferrous scrap. A sudden jump in copper prices means the value they get when they process and sell that scrap, the turn value, goes up. It helps their margins.
Okay.
Same thing for commercial metals, CMC. They run recycling yards. The copper scrap they already have in stock is just worth more now than it was before the accident.
So that's miners and recyclers. There's a third group you mentioned, wire and cable makers. That seems counterintuitive. They use copper. Wouldn't higher prices hurt them?
It depends entirely on their pricing power. If they can pass the higher cost of copper through to their customers quickly using surcharges, they can actually benefit.
Okay. So it's about how fast they can adjust their own prices.
Exactly. If they can push the cost increase through faster than they feel it in their own purchasing, they can maintain or even improve margins.
Who fits that bill?
Encore Wire. Wire is a good example. They make copper wire and cable here in the U.S. Often, a higher copper price environment actually supports their product pricing. Plus, they might get some gain on inventory they bought earlier at lower prices.
And maybe larger players, too, like Hubble. They do electrical components.
Yeah, Hubble is known for being pretty effective at using surcharges. They have mechanisms built into contracts specifically for volatile commodity prices like copper. So when copper jumps like this, they can usually pass that cost along pretty efficiently.
Okay, so that covers the winners. Now the flip side. Who gets squeezed by this higher copper price?
Well, it's basically the companies that use a lot of copper but can't pass the cost on immediately. They face margin pressure because their input costs rise faster than their selling prices.
And the first group there is?
Connectors and electronics manufacturers. Think about all the copper and cables, connectors, circuit boards.
Lot.
Yeah, if their pricing structures or their contracts have a lag before they can adjust for that 3.8% spike in copper, their margins get squeezed in the meantime.
So companies like Amphenol APH.
Exactly. They use a lot of copper in connectors and cables. That lag between the copper costs going up and the prices catching up creates a risk for their near-term margins. Same for TE connectivity, TE dollars. They've got similar exposure in harnesses and connectors. It's a cost headwind.
Makes sense. What about other big copper users like HVAC, air conditioning and heating systems?
Definitely. HVAC is another key area. Copper tubing and wiring are essential components in air conditioners, heat pumps, for the coils and heat exchange.
To companies like Carrier.
That's right. For Carrier, a sudden spike in copper can pressure their margins within the quarter. They buy the copper at the higher price, but they might not be able to raise the price of the finished AC unit until their next scheduled price adjustment.
Which could be weeks or months later.
Could be. Same situation for Train Technologies, TTT. Similar copper exposure, similar risk of cost inflation hitting them before they can adjust prices.
Okay, so connectors, electronics, HVAC. And I guess we have to include the company where it all started.
Yes, absolutely. The most directly impacted company is, of course, Freeport-McMoRan, FCX itself.
Yeah.
They're dealing with the operational shutdown, the reduced production and sales, the guidance cut, and the fact that this disruption at Grasberg is going to last well into 2026. That's a direct hit to their operations and financials.
So wrapping this up, it seems pretty clear. One accident at a major mine like Grasberg instantly creates winners and losers across the whole copper supply chain. It really depends on where you sit, whether you produce it, recycle it, or use it, and critically, how fast you can adjust your pricing.
Exactly. And something for you, the listener, to think about going forward. This disruption pushes the copper market towards a deficit, at least in the near term. It could keep prices elevated into 2025, maybe even 2026.
So the question is, how do companies that rely on long-term copper supplies manage this? If their contracts didn't account for a sustained price increase like this, can they renegotiate? Or are they just stuck absorbing higher costs for the next year or two? That's the next challenge for many of these firms. Definitely something to watch. And just a reminder to everyone listening, this conversation reflects the opinions of the author based on the analysis presented. It is not financial advice, and it's not a recommendation to buy or sell any stocks.
Please do your own research before making any investment decisions.
Thanks for tuning in to Breaking News to Trading Moves.